Are you a new real estate investor, struggling wholesaler, or cash buyer looking for better ways to close more deals? You're in the right spot. Each week, I pick a random house off the internet and I show you step by step how to analyze it for a cash deal and a creative deal. Whether you're just starting out or you're seasoned, this podcast is designed to give you particular strategies that you can use right away. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. My goal is simple to help beginners and struggling investors close their first deal or their next deal, all using low to no cost tools to analyze properties and be able to make a strong offer. This is the weekly deal analysis. Let's get into the show. In this week's episode, we are going to Cincinnati, Ohio, 6292 Simpson Avenue. This is a two-bedroom, two-bath, just under 1,400 square foot, cute little bungalow cottage. Let's look at this thing and see if it's worth it. All right. It was built in 1922, so it is old. Let's look at the pictures here. I don't like the color, do you? I mean, that's something easily fixable. It does look like it's wood siding, so just to slap a coat of paint on there, you should be good to go. Looks like we got a little bit of wood rot or paint chipping or something up here. It looks like it's on a corner street, which can be good, can be bad. I got a lot of stuff in here. And it looks like we got some original hardwood floors. Got the old 90s style carpeting. This looks really high. Is it me or does this look like really high up? Like you got to be like 7 foot tall to use this thing. I don't know. There's two microwaves and two ovens. Yeah, more power to you. Bathroom. Yeah, it's either a soaking or a jacuzzi tub or jetted tub. I guess you can't say jacuzzi because that's a brand name. They definitely have a lot of stuff in here. Mix and match tiles. Um, Looks like a little rust right there, a bunch of calcium buildup. Oh, and a nice clamp to hold the door shut. All right, so clearly this thing needs some work. Got a one-car garage in the back. All right, and we got some window AC units. We want to check and see if it's got central air or heat, but more than likely it's probably baseboard heat and window units for AC. All right, so they're asking 140,000. How long have they been on the market? 65 days. Yeah, not great, not horrible. I don't know this market totally well, but I do invest in Ohio. See what the agent has to tell us. Plenty of opportunity for any potential buyer. I'm currently tenant occupied. Okay. Cash flow for new and seasoned. If you're looking for something to occupy yourself, it would be perfect to bring your own design skill. Basically saying kick the kick the tenant out and move in yourself. Home has a newer roof, sorry. Partially finished basement, stainless appliances, jetted tub, spacious backyard. All right. And we want to check for the heat and air. That's going to make a big variation on how we put this offer together. Appliances. All right, so we got a gas water heater, ceiling fans and window units, forced air. Hmm. If it has forced air, that means it already has duct work. And if it already has duct work, then you should be able to run central air through there. I don't know. Vinyl windows, basement, partially finished walkout. I wonder if they're trying to say that the garage is a partially finished space. I don't know. They didn't show us pictures, so it doesn't do us any good there. All right, natural gas, public water, public sewer, no HOA. Not giving us anything here. Oh my gosh. In 2013, this place sold for $6,000. Really? And now they're asking 140,000. That is a 2,233% increase. Wow. That's crazy. Property taxes are super cheap here. 526. Where do we find those at? All right. What's our neighborhood look like? Um, got some off markets. 147. That's actually smaller. 178. 20. Gotta be rentals or just lots. 114 on the same street. Let's see what this one looks like and when it sold last. All right, so pretty comparable. We'll say 1,300 for rent. That's only a 2-1. We have a 2-2. See if this thing tells us what it sold for. No price history. I wonder if this is a non-disclosure area. All right. So that one went for 114 and it was under 1,000 feet. This one is 140 at 1,400 feet. Hmm, let's see what else I might be able to find. Is there anything on the market? All right, so we got a 125, a 4 and 2, roughly the same square footage. 141, 170, 145. 52. I don't think these values are really off. I need some more deep research on this, but based on this, I'm going to say our ARV, excuse me, ARV stands for after repair value, what it's worth in the eyes of the bank, I guess, or a potential buyer to what that value is once everything is completely cleaned and fully renovated. So I'm going to write that number down. ARV 125. All right, so I think we pulled off everything we can in Zillow. Now we're going to jump over to the Invest Nest and analyze this thing for a cash deal. If you're looking for a super user-friendly tool, especially for beginners or somebody with a tight budget, I would check out the Invest Nest. The big guys, PropStream and Privy, they're phenomenal, but 100 to 150 bucks a month is not really the best spot to start for somebody starting or beginning in real estate investing. I love the Invest Nest. I'll have a code down below. If you want to try them out, with that code, you get your first week for free and 50% off your first month. To my knowledge, they only charge $15 a month. We're going to go through, let you look at it, and see if you like it. If you do, click that link, try it out for a week. Doesn't cost you anything. One benefit that I love about this is the skip trace feature. They don't charge additional, they include it in that monthly price, and it is a extremely vital tool. Finance details. Let's see. So it looks like they got a mortgage about a year ago for 105,000. So, all right. So they do have a mortgage on it. Their estimated mortgage payment is $630. which is good to know because if we wanted to put out a subject to offer to where we would just take their existing mortgage over, that's a pretty solid price. And our estimated rents here are a little over 1,000. So that could be a decent spread. And the other property we looked at when we pulled it up on Zillow showed that rents were like 1,300. We're going to check one more thing and kind of average those numbers together, and that's what we're going to use as our rental price. Yeah, they didn't put that in Zillow. So this sold in 2013 for 10,000. Zillow was saying 6,000, right? Either way, it was a foreclosure. I'm sure it needed a whole bunch of work. Bravo to them. Hamilton County. All right, let's calculate some numbers. We're gonna call this 6292 Simpson Ave. Our purchase price. All right, so we said our ARV or after repair value is $125,000. We're gonna offer them on a cash price 70% of that. Let me use my calculator real quick because I cannot do math in my head. That gives us an offer price of 87.5. 87,500 is our cash price. So we're going to offer them 87,500. Well, typically it's 70% of ARV minus repairs. There is some repairs needed in here, but for this purpose, we're going to just say that there are no repairs. Realistically, there's probably about 15,000. So if that were the case, I would offer even $15,000 less than this. And oh, excuse me, closing costs are going to be 4% because we're going to pay both sides. Our lender is going to charge us 2 points. It's our DSCR lender or debt service coverage ratio lender. All they care about is does the property cash flow and does the rent more than cover the mortgage? It's really all they're looking for. They don't require you to put bank statements or tax returns or any of that stuff. They do pull credit though, so you still got to have good credit. We want to put 20% down, and I want a 30-year loan. Our interest rates, I got quoted last week on one that was right around 6.75, somewhere really close to that. I don't remember specifically. Our rents, so to confirm our rent numbers, we're going to jump over to HUD just to confirm and see what Section 8 would be willing to pay. On HUD, I'll have drop the link below. Super user friendly. We're going to go through this one and I'll show you how it works. First, you come through and you pick your state, and then you pick your county. This is in Hamilton County. There it is, Hamilton County. Search. No, this one goes by zip codes. So our zip code is 45224. 5. Too far. 45224, 45224. Oh, goodness. That's not a good number. So I would definitely not look to rent this to Section 8 because they're only offering, no, hang on, I think that's for a one bedroom. Oh, sorry, that's only for a one bedroom. There we go. So efficiency, one bedroom, two bedroom is that $1,000. And keep things simple. We're going to go with both of these numbers because the Invest Nest is saying almost the exact same number. So we'll just use this. All right, our property taxes are already factored in. Insurance, I like to factor in about $125 a month, and that's going to be $1,500 a year. Our property manager is going to charge us 10%, pretty standard across the entire country. All of our utilities, our tenant is going to be paying, so we're not going to factor that stuff in. War chest or reserve funds, and that's going to be your 5% for your repairs and maintenance, vacancy, and CapEx. CapEx is something like the roof, the HVAC, basically big expenses. Our appreciation rate is about 2%. That's pretty standard. It's a little low. On average, we're about a 3%. Um, Rent increase rate is going to be 2.5. I stay right around in there to where 2.5 to 3%. I like to keep tenants longer. That way I don't have as much rollover. Planning to hold it for about 10 years. And we are real estate investors. We don't pay full commissions. All right, you ready to analyze this thing? Before we see what these numbers look like, I would really appreciate it if you would hit that like button for me. It would help the channel out drastically. I appreciate you for that. 196, almost $197 a month positive cash flow. That's pretty awesome. We're looking at 22.4 out of pocket. Our down payment's going to be 17.5. Interest rate, not the greatest, but that makes our mortgage payment only 454. And that's still putting money away in reserves. I'm getting ahead of myself, sorry. Cash on cash return, 10 and a half. Return on investment is 21 and a half. And I don't follow the 1% rule, but if you do, it hits. So one of the things I really like about the Invest Nest is it breaks down all the different numbers in here. So we know our total expenses are just shy of 900 bucks, and our rent is a little bit higher than that. So we're going to keep 164 basically into our reserve fund. And that's for when things go wrong. Because it's never a matter of if in real estate, it's always when things go wrong. And we're breaking everything down here. So year one, it's already over a 10% COC or cash on cash. And factoring in our 2.5% rent increase, year three, we're almost at 12, 5. And by the time we get ready to sell this thing, we're looking at a almost 21% cash on cash return. Good cash flow and raising rents, all that fun stuff. What did you think about that? Is $200 a month enough for you? For me, I like to look for at least 300, and I like to get my original capital back, which would be this 22. I like to get that back in 3 years or less. Now that we've figured out what this thing looks like on a cash deal, we're going to jump over and analyze this thing creatively. This is my creative calculator. You can get it off my website, christhompsonteam.com. There's a bunch of other useful tools on there that I don't charge for, and I hope you find it useful. If you do, drop me a comment and just say, hey, it works great, or hey, Chris, you got to change some stuff. So our ARV, or after repair value, is going to be 125. And since it looks like they just pulled a mortgage out on that thing a year ago at, I believe it was 105, I think we're going to offer them 110. And with that being said, we're only going to offer them a 2% interest rate. Now we need to figure out our PITI, or principal, interest, taxes, and insurance. For that, we're going to jump over to Bankrate. Now on Bankrate, to figure out what that PITI is, I'll drop the link for Bankrate down below as well. So our offer price is going to be 110,000. I never like to put more than 5% down when I can get away with it. 30-year term, our interest rate we said was going to be 2 points. Our zip code is 45224. And our property tax is, what did they tell us over here? Our property taxes is going to be 44 a month. And update. So that gives us a PITI, or principal, interest, taxes, and insurance of $555 a month. 555. And we said our potential rents were 1,098. That gives us a gross cash flow of 543 with a net cash flow of 268.50. 165 going into that war chest, and our manager's getting about 110. So now we're right at 2 years on these numbers. Now we got to go plug these numbers. So our 5% down is going to be that cash to the seller, which was $5,500. This thing hasn't been on the market too long, so we're gonna have to kind of play ball a little bit with the agent. 1% would be 1,000, about 1,100 bucks. So I think we're gonna throw out 2,000. There is no assignment fee because we're not working with a wholesaler. Closing cost is at 4% of the purchase price. Cost of renos, we know it needs work, but for simplicity, we're leaving that part out today. Holding cost is going to be 2 months of this PITI, 1 month to find the tenant and 1 month for our agent to place that tenant. And a good TC or transaction coordinator is going to cost about 1,200 bucks. So all in about 4.5 years. And on this, it is not factoring in any price increases in that rent. When we did the cash analysis, because the InvestNest software is so good, we were able to factor the 2.5% increase. So if we don't change rents at all, we'll have our initial investment back in 4.5 years. Also, our initial investment on this is only $14,000. When we look at our cash analysis, it was $22,000. So cash versus creative, it's a whole lot less out of pocket. Going creative, and the numbers just work better. That's why I love trying to buy everything I possibly can creatively. If I'm going to buy it cash, I'm going to get a really good deal on it. If you made it this far in the video, you had to have gotten some value out of it. If you would, hit that like button down below. If you think you might know somebody that could find some value out of this as well, share it with them. I really appreciate it, and it helps the channel out tremendously. What did you think about 6292 Simpson Avenue in Cincinnati, Ohio? We did a cash analysis and a creative analysis. What are your thoughts? For me, it would really be creative only. The cash deal was pretty good, but I realized I would go lower on the price. Not saying I wouldn't buy it, but obviously I'm the creative guy. I want to buy everything creatively. That's going to do it for episode number 35. I appreciate you for watching, and we will catch you next time on the weekly deal analysis here in the Corner Barn.